Hello. Sorry, but I had technical problems with my new software for that would integrate YouTube and screen sharing, and I had to make the meeting, the webinar, in Zoom. I think next time we will go again to Zoom. I think it's easier. And meanwhile, I wanted to share in a brief presentation what we discussed in the webinar. We start by analyzing the VIX and the market conditions. So we are seeing here the VIX, and currently the VIX is still more or less steady. We have an event coming with elections. I don't think volatility will come down until there's an outcome on the elections. I think there's more pressure to the VIX to move up if also there's an increase in infections or lockdowns in the economy in the next days, because if there's no big COVID situation until the election, there's no pressure for the volatility to come down, and this also impacts on the VXX, which is our trading volatility instrument. And let's analyze its term structure and the futures of VIX. So basically, we are seeing that there is a backwardation. So there's some kind of a small pressure of VXX to move up, okay, if volatility is steady. If volatility comes down, obviously VXX will come down, but with some kind of small pressure to stay still, at least to not come down as fast as VIX. And I feel that VXX is not moving too much down as 21.20 maximum in the next week. So this is something that we should take into account when having strategies on VXX. So obviously delta negative strategies like short call vertical, even the crop trade or the surf trade should be avoided, and we should only trade more or less delta neutral strategies. And also let's analyze, before entering to the detail of the strategies that I'm proposing, the average implied volatility of the two expiration months, one expiration dates, one before the election and the second one after the election. So we can see there's a huge step here in implied volatility, and better to use this high implied volatility to sell volatility. And how do we sell volatility? With vegan negative strategies like buying butterflies, okay? So if we buy a butterfly on 6 November, which is just after the election, okay, we could have this profile, okay? As I'm telling you, I feel that probably VXX should move around this level, okay? And that's why I'm positioning this butterfly not as left as, for example, the black hole. So more or less at this level, and we have some room to the upside if the market starts increasing in volatility. Another option that we can trade is the iron condors, but with the iron condor, we have less theta. I prefer to use butterflies because there's much faster time decay, okay? And this is one strategy to consider that we discussed in the webinar. Another one is with the spiders, and this is a SPY speed trade, okay? And if you see here, again, like with VXX, there is a step in the implied volatility before and after the election. So if you see here on 4th of November, which is just after the election, the implied volatility gap up from the option expiration date before the election. Okay, so this means that we could sell the 6th of November, for example, and which is a little bit bigger than the 4th of November. Okay, that's why I choose the 6th of November, and we could buy the 18th. Okay, because we have cheaper implied volatility, for example, as when comparing with 16th of November. Okay, so either one is okay, but I prefer to have the 18th of November because we have a smaller implied volatility. Okay, so the risk profile of the initial trade set up for the SPY speed trade is a calendar, as you know, and it's much wider because we have this nice implied volatility structure where we sell expensive implied volatility and we buy cheaper volatility. So these are the two strategies that I recommend for the trade event that is approaching the election. Obviously, these trades are not to move farther than next week because not the next weekend, but the other one we will have the weekend before the election. So I would not leave these strategies more than at 29th or 30th of October, okay, and get out with them, and do not trade short-term strategies during that weekend. So the right trade is okay because it's a longer term trade, okay, but if you are approaching the situation where the right trade needs to be exited or adjusted, better to take it out, wait for the elections, wait for the implied volatility to come down and put a new trade, okay, because obviously right trades are Vega positive, and if there's a big volatility drop in the back months, the trade will suffer a bit, but that's part of the process. As long as price is inside the tent and theta is positive, we will benefit. Okay, many thanks for watching this video. It was a brief of the webinar, but we cover the key points and the strategies that I promised to you. Okay, thank you. Bye-bye.